Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So I like to do these videos occasionally, just talking about SPY, just talking about Qs. These are more just focused on some technical levels, right? I'll talk about some option pricing too, but um, I'd like to spend some time going over this just because it's pretty important just from like an overall um, point of view from how you trade, how you form your trade biases, right? Whether you're near-term bullish, near-term bearish. Also for hedges, right? So this is something that if you are somebody who has hedges on, you trade options for hedges, or if you are just outright bearish on a lot of these different markets and different instruments. It's just a good time to go over this. For a long stretch this year, it was just kind of like straight up, and now that we're starting to pull back, people are kind of wondering what the key price points are. So I talk about this during our option sessions. We talk about this once a week, just kind of like laying out the technical environment. So let's just go over it so you can see it from like a visual standpoint. So first off, when Trump first tweeted a couple Sundays ago, we had basically just gone into that weekend right at the 52-week high, right? So this was following like the May jobs report, and we had gapped up, closed strong, and then that Sunday is when we had the first of several tweets, right? And that next day is when we gapped down, had a pretty big move off our low, right? But then the following day here is when we really started to do some damage, right? So we lost basically the two key moving averages of the trend, right? The 8 EMA, which is here, the green level, and then the pink level, which is the 20. So during that stretch, we lost both, and we came into the 50-day, which for all intents and purposes, is kind of like the last line of defense of this really aggressive uptrend. Okay, so held it right, and gapped down last week, and then we rallied pretty quickly to reclaim the 50-day into the weekend, right? So now, what's happened this week? Well, we tried to get back through the 50-day after a down open Monday, right? Tried to get back through, failed. Failed Tuesday, failed Wednesday, and now we are starting to roll over again, and we are approaching the May low, so like the most recent low. So now, what's interesting are a couple things, right? So first off, let me draw this line. So as you can see, right, 280 was a really significant area. October, November, December all failed and fell apart, right? Then we failed there in February, and we chopped around in March, and then once we finally got through it, right? So a lot of chop, chop, chop. Once we finally got through, it led to this really nice breakout and run, right? Now we're rolling back down, and we are back testing 280 again. So we bounced there last week. This will now be our second test with increasing momentum lower, right? And if we break back underneath this, not only are we going to reset monthly resistance, right, which it took us a long while to get through. So not only will we reset that monthly resistance, but it should put us on a path to hit the 200-day and the 100-day, which are kind of in a congestion area around 277.50. So about another 1% underneath pretty quick. Um, why I say momentum is picking up? Well, yes, the volume has been lighter during this move, right? But as you can see, that now what had been like these momentum trend moving averages, right, like the 8 and the 20, basically all year, are now starting to work against us, right? So like the 8 EMA is starting to be overhead, right? The 20-day is starting to curl lower, and that could start to be overhead. So the fact that we haven't bounced back as quickly as normal, not to mention the headlines have been pretty consistently bearish, right? It's kind of hard to be super bullish when there's still, escalating trade tensions. So you have failure at the 50-day, curling lower of the 20-day, the 8 EMAs entering the picture on the upside, and now if the spreaders break back below 280, right, then that resets this long-term range, and at minimum, right, at minimum back in March we hit the low 270s, okay, so you could be looking at low 270s. If you want to respect the range from last year, you could be looking at the low 260s. So it's very, very important where we're at or what we're approaching and how we handle it is really going to determine what the next move is, okay? Now, Q's very similar. I always talk about the spiders. Q's very similar, if not a little bit wider and looser. The spider is just a very tight setup with very key areas you can focus on. So that's why I like to talk about the spiders more. Q's obviously a little bit more of the poster child of all of this because of a lot of this, a lot of the headlines and a lot of the weakness has stemmed from tech. So Q is a little bit more of the poster child, but spiders to me are a little bit more interesting. Plus, it's broader, right? You got a pretty good grouping of all sorts of different types of names versus just tech. All right, now from an option point of view, I mean, as you would expect, right? Once the volatility starts to creep up, option prices start to creep up, so the cost of protection is going up. Now, when you get the wider range in days, what that means is also that the spider prices are going to be priced. The spider contracts are going to be priced in bigger moves on a weekly basis. So, whereas maybe like 2 to 3 weeks ago, right? We would have had uh, maybe only like for like a week without really any news, and especially next week is a holiday shortened week because the markets are closed Monday. You probably would only be looking at like maybe like a 2.5, 3 point move max. Now through next Friday expiration, which again there's no news. The jobs report will be during the following week, right, to the beginning of June. So with no news, you're looking at almost a $6 price in straddle for next week, right? So if you want to go out one more week, so June 7th, so that'll be about 10 sessions, including tomorrow. So 10 sessions and that early and the June jobs report, right? You're almost into like the 8 point price then. So you can see, I mean, we we are really getting to some of these price to moves like we saw late last year when the weekly straddles were like 2%, 3%, and that's kind of like telling you that people are starting to get a little bit more nervous, right? Cost of protection's going up, right? You can see applied volatility versus historical. These are shorter term options. Cost of protection is going up, right? Cost of protection is going up. Average trading ranges are increasing, so volatility is here, and it doesn't appear like it's going away anytime soon. So this is definitely something you need to factor into, the near-term outlook. In addition to just like the technical setup, right? Overnight risk is higher. You're seeing triple-digit gaps every night. For the most part. I mean, for the last 2 weeks, we basically had a triple-digit gap one way or the other almost every single day. So volatility's here. Trading ranges are wider. Things are moving around in a lot quicker and a lot sharper ranges. So hopefully this is the new normal because that means that it creates a lot of trade opportunities. But we'll see. You never really know, and one headline could really change this tape pretty quick. So I'll be on the watch out for that. From an earnings point of view, kind of like wrap it up with a busy week tonight. Software, some tech names, and then next week's actually a pretty busy lineup for software stocks. So, if you want to do some early planning before the earnings on the radar video goes out tomorrow, keep an eye on software because a pretty busy lineup of just like specifically software names next week. And that's interesting because those are some of like the top names in the market right now. So definitely shaping up to be an interesting week next week, even though it's a shortened week overall because of Monday's holiday. All right. So as always, I'd love to hear from you. Questions, comments, reach out. Hope you guys have a fantastic night, and I'll talk to you all tomorrow.